What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today in this video we're going to talk about how much money you need in order to start day trading. Check it out. Alright guys, let's go ahead and jump into this video here and let's talk a little bit about how much money you need in order to start day trading. A lot of people think that you can start day trading with 200 bucks. A lot of people say you need 5,000, you need 10,000, you need $25,000 in order to obviously be above PDT and trade in a margin account. But the reality that people aren't really talking to you about when it comes to figuring out how much money you need to day trade is the simple fact that by hitting the like button, you automatically get 500 extra XP points, and it helps with your margin on your account. So, I mean, that's just kidding, but please hit the like button. It really helps out tremendously with the YouTube algorithm. Now, another thing that you can do, right, to help me out real quick here is comment in the comment section, anything, just say hi or let me know how much money you think you need in order to start day trading, and that helps out with the algorithm. Now, for me, what I think people need in order to start day trading all depends on their skill set, on their education as far as day trading goes. You see, most often than not, when you're starting off brand new, you're better off spending a few bucks on going through courses that are good, that are well built, that are robust, and learning the skills, and then after you graduate from the courses, trading a smaller amount of money just to get a feel. Just to get a feel for what it's like. Now, what's a small amount of money, right? You might be asking. Well, a small amount of money is going to be dependent on the individual's risk tolerance and net worth, to be brutally honest with you. It might be 500 bucks, or it might be 50,000. It all just depends on the end user, okay? Not necessarily on anything else, but the individual itself, himself, herself. Why? Well, because risking $100 per trade for a new trader might be a lot of money. It might feel like a lot of money, especially if you only have 500 bucks in your trading account, right? And then risking $1,000 per trade might be a little bit of money to a new trader, depending on their risk tolerance and on their trading account funds, right? You might have somebody who is actually very well off, very wealthy, and losing $10,000 over the course of a month is the equivalent of you losing 50 bucks in your trading account over the course of a month. It might be something like that, maybe losing 100 bucks in your trading account. It just depends on the end user. So what you have to do after you go through a good trading course and you decide to start trading in a real money account, well, it's figure out what that dollar risk per trade is for you. Now, usually what I recommend to traders, newer traders, is go through a course, trade in a simulator, prove that you're profitable in the simulator. Then when you graduate to a real life money account, at that point in time is when you want to start experimenting with that. You want to see what it feels like. So you're going to take on a few trades here and there with maybe a different risk tolerance level just to gauge your emotions on losing that money. If when you lose $100, it feels really bad, or when you're in a trade and you see that you have that capability there or the ability there that you might lose $100 and you feel on edge, you feel where you might even be sweating cold a little bit, you feel twitchy, you might have your hand on your mouse, can't get my mouse up there, you might have your hand on your mouse and your finger hovering over the trigger and it twitches at times. If that's the case for you, then you're nervous. And if you're nervous, it's probably more than likely that your position size is too big. Therefore, that means your risk on the trade is too large, and that's causing emotions. And when emotions creep up on you in a live trade or in any trade period, you are not going to allow that chart pattern to fully develop itself and actually work itself out, whether or not it works out in your favor or not. You're not going to allow the pattern to actually develop and work itself out. And if you don't do that, then you're not going to trade properly. And when you don't trade properly, you end up chopping yourself up in what could have been otherwise a very nice pattern, okay, a very nice chart pattern. So you want to make sure that you're position size accordingly. Now, when you're in the simulator account, in the simulator, you can practice that out a little bit, because honestly speaking, what I always tell my students, and you can go through my courses at thedaytraderchatroom.com, you can become a DTC Pro student and go through my courses, get access to the chat. You have access to everything when you're a DTC Pro student. There's a link in the description and comment section below. When you go through that, and I tell my students, trade in the simulator and treat the simulator like it was a real account, meaning that you are going to put on yourself a little bit of pressure, because you're going to say to yourself, or you're going to say to yourself a rule: I cannot trade live money until I graduate from trading in the simulator. And in order to graduate from trading in the simulator means I have to have passed my courses, and I have to be trading in the simulator for a minimum of 3 months, preferably 6 months to a year. But I always say a minimum of 3 months, showing yourself that you're profitable in that simulator. I always say 6 months to a year because that way you expose yourself to a tremendous amount of different market environments that you won't get in a month or 2 or 3 typically. But within that simulated time, you want to put that rule on yourself where you say to yourself, I will not graduate, meaning I will not go trade live money until I finish trading in the simulator, showing that I'm profitable and I can handle it. And then you go off to trade in the live account. And then at that point, you want to make sure that you figure out that dollar amount risk per trade and you go off of that. And then you will know how much money you specifically will need to start day trading. Like I said from the beginning, it could be 500 bucks, it could be 5,000. I personally think, okay, now we're just coming into like a personal realm here. I personally think that a good starting amount balance for a new day trader that will allow them to trade in a cash account and not be limited dramatically on their trading is roughly between $2,500 to $5,000. I think that's a good starting balance. It'll allow you to trade, let's say you trade on a $5,000 account, it'll allow you basically to trade 2,500 bucks every day, because on Monday you take a $2,500 trade, on Tuesday those $2,500 aren't available, but your other remaining $2,500 are available. Let's say you sold out of that trade at break even on Wednesday, that initial Monday $2,500 is now available. Okay, and if you trade options, well, that money just basically is available the very next day. When you trade options, if you trade options today, $2,500 worth or $5,000 worth on Monday, let's say, on Tuesday, those $5,000 are once again available because they settle the very next day when it comes to options. All right, so that's what I roughly say. $2,500 to $5,000 is a good starting balance. However, if you don't have your risk tolerance down packed, if you don't have discipline, well, then you can blow up $5,000 as easy as you can blow up 500 because you might lack discipline. So you need to figure that dollar amount out for yourself. Okay, that's the only thing that I would say. Now, can you trade in a larger account? Of course you can. But when you start trading larger, I really always emphasize, like I always emphasize, risk tolerance, risk management is absolutely essential, because the last thing you want to do is get yourself into a trade, hold the bag, and blow up a $10,000 account. You don't want to do that. As a new trader, that's going to leave such a bad taste in your mouth that it's crazy. That's why I put such an emphasis in my courses and in the lives when I'm on live trading in the Discord and talking with everyone and going over recaps and doing live lessons every single day. I put such a huge emphasis on risk management, because risk management is what keeps you alive in this game. And without it, you're going to end up being hurt and thinking that the stock market's all one big scam, that market makers are fishing out your stops and all sorts of other things, when in reality you just didn't learn properly and you didn't set reasonable goals and establish good risk tolerance and good risk management, which is absolutely essential. If you're risking 100 bucks on one trade now, 50 bucks on the next trade, 300 bucks on the following trade, you're going to be churning your account over and over again. Pick one number, stick to it, and it has to be a number that allows you to trade properly and allows you to let those patterns work themselves out. All right. So in other words, don't focus so much on what the starting balance to trade is, and focus more on in your education and on proper risk parameters. That's what you really want to focus on. If you want to learn more, guys, subscribe to the channel, hit the notification bell so you're alerted when I go live and when I upload my videos. I go live in pre-market here, and I'm always live over on my Discord. There's links in the description and comment section for you to check that out. Thank you very much for watching. I hope you're enjoying your day, and I hope to see you in the Discord. Smash the like button for me. It really helps out tremendously with the YouTube algorithm, and I'll catch you on the next one.